This is the luxury world. Get inspired with us today and tomorrow. In this video brought to you by Luxury World, the focus turns to one of the most telling stories in modern horology, the transformation of the stainless steel Rolex from an untouchable icon to a more measured, data-driven market performer. What was once a feverish chase for exclusivity is now giving way to a period of reflection, recalibration, and quiet correction. Be sure to subscribe to Luxury World for exclusive access to upcoming insights, curated content, and expert guidance to help elevate every step of your watch investment journey. For decades, stainless steel Rolex watches have represented the perfect intersection of craftsmanship, durability, and prestige. Yet, over the past 5 years, these models have evolved far beyond their practical origins. They became cultural emblems, status symbols that transcended the boundaries of horology. From corporate boardrooms to social media showcases, the steel Rolex came to symbolize success, power, and discernment. The phenomenon was fueled not only by design excellence, but by scarcity. Authorized dealers faced unprecedented shortages, and obtaining a professional sports model at retail became nearly impossible for the average consumer. This scarcity elevated stainless steel Rolex watches from luxury goods to coveted assets. On the secondary market, premiums reached astonishing heights, some models trading for tens of thousands above their list prices. The watch had become more than an instrument of timekeeping. It was an investment, a cultural token, and in many ways, a parallel currency. But markets are cyclical, and 2025 marks a turning point. The same forces that once propelled Rolex to record-breaking demand are now reshaping its trajectory. Economic headwinds, changing consumer psychology, and increased availability have collectively introduced a new tone of restraint. As of July 21, 2025, the Rolex Index, a benchmark tracking the performance of key reference, registered 1,466.08, showing a 1.15% rise from the previous month. At first glance, this may seem encouraging, a hint of renewed optimism. Yet, a deeper examination reveals a different picture. The brief rally seen from late June to early July, which pushed the index just above 1,470, quickly lost momentum. When viewed through a 3-month lens, the market reveals a gradual but undeniable softening, with values declining by roughly 2.71%. This is not the collapse of a bubble, but rather a slow and deliberate exhale, a necessary correction after years of speculative intensity. The feverish exuberance that once characterized the market has cooled. Enthusiasts who once rushed to pay inflated premiums now act with calculated patience, while sellers show a growing willingness to negotiate. One of the most striking aspects of this transformation is the emergence of the Datejust as the stabilizing force in the Rolex ecosystem. The Datejust 41 reference 126334 currently leads all models by trading volume, representing 12.76% of total Rolex resale activity. When combined with the two-tone Datejust 41 reference 126300 and the Datejust 36, these three models account for nearly 26% of total secondary market transactions. This dominance reflects a broader shift in collector sentiment. As speculative energy drains from the market, timeless and wearable models are regaining their prominence. The Datejust, classic, versatile, and understated, embodies this new era of balanced demand. In contrast, several of Rolex's professional sports models, once viewed as untouchable grails, are experiencing the sharpest corrections. The Submariner 124060 declined 5.4% in the past month, while the GMT Master 2 Pepsi reference 126710BLR dropped 5.01%. Even the Submariner date saw a modest but telling 1.27% decrease. These figures reflect a changing reality. The market is no longer willing to sustain inflated premiums based on scarcity narratives and influencer amplification. Collectors have grown weary of speculative hype. The overexposure of these icons has diluted their once mythical aura, and the modern buyer now places a higher premium on authenticity, balance, and long-term collectability rather than social prestige. Nowhere is this sentiment more evident than in the fate of the Daytona. For years, it was considered the crown jewel of Rolex's catalog, the definitive grail that embodied exclusivity. Waitlists were measured not in months, but in years, and the secondary market prices reached astronomical levels. Owning a Daytona meant outpacing the market and beating the system. Yet, in 2025, that perception has shifted dramatically. Sales data shows a steep drop in Daytona trading volume, from over 250 units per month in mid-2023 to around 150 units by mid-2025. Average time on the market has ballooned from 25 days at the height of demand to nearly 100 days today. A watch that once vanished within weeks now lingers for months before finding a buyer. The dynamic has changed entirely. The sense of urgency that once fueled Daytona purchases has dissipated. Dealers who once maintained multi-year waitlists now initiate outreach to potential buyers. The model that once symbolized scarcity now stands as a symbol of recalibration. The Submariner, perhaps the most recognizable Rolex of all, has undergone a similarly dramatic transition. Once regarded as the quintessential daily luxury watch, the Submariner enjoyed years of unrelenting demand. At the height of its popularity in 2022, secondary market units typically sold within 20 days of listing. Today, that figure has stretched to nearly 80 days. This fourfold increase in time to sales reflects more than slowing demand. It represents a fundamental rebalancing of the market's supply-demand equation. Dealers are now carrying more unsold inventory, and the once mythical sense of scarcity is fading. Buyers are exercising patience, waiting for further price adjustments, and the urgency that once defined the Submariner's appeal has given way to hesitation. The ongoing correction has also reshaped the power dynamics between buyers, dealers, and the brand's retail ecosystem. For years, acquiring a high-demand Rolex required not only persistence, but also strategic purchasing behavior. Authorized dealers often tied access to desirable steel sports models to the purchase of slower-moving inventory, such as diamond-set Datejusts or gold variants. Customers were encouraged to build relationships through repeated purchases before being offered a Submariner, GMT, or Daytona. That system, designed to sustain artificial exclusivity, is now under strain. Reports from collectors and traders across global markets suggest that dealers are proactively contacting clients, offering allocations for pieces that once required extensive waiting. The tables have turned. Watches that once chased buyers are now chasing exits. The luxury watch market is no longer a seller's playground, and stainless steel Rolexes are no longer the guaranteed golden ticket they once were. Inventory is rising, sales cycles are lengthening, and the tone of dealer communication has shifted from selective confidence to quiet persuasion. Beyond brand dynamics, macroeconomic conditions have played a decisive role in the cooling of the Rolex market. The same environment that once fueled explosive growth, stimulus-driven liquidity, speculative asset appreciation, and a cryptocurrency boom, has given way to a climate of caution. Disposable income has contracted, speculative enthusiasm has waned, and the psychology of luxury consumption has evolved. Purchases once justified as investments are now scrutinized more carefully. The idea of paying $25,000 for a watch that retailed for $15,000 no longer feels like a clever arbitrage. It feels like a miscalculation. As 2025 progresses, stainless steel Rolex watches occupy a new position within the hierarchy of luxury. They are still highly desirable, still meticulously built, and still revered. But they are no longer treated as commodities of speculation. Instead, they are returning to what they were always meant to be: expressions of craftsmanship, heritage, and timeless design. The current market climate encourages thoughtful collecting rather than impulsive acquisition. It rewards knowledge, patience, and appreciation of nuance. For those who utterly understand the DNA of Rolex, its balance of technical precision and enduring aesthetics, this is not a downturn, it is a renaissance. In this environment, authenticity has regained its voice. Hype is fading into the background, and substance has reclaimed the stage. The stainless steel Rolex, once caught in the turbulence of speculative excess, now stands as a symbol of resilience and refinement. The hype is fading, but the heritage endures. The stainless steel Rolex remains an icon, not because of its scarcity, but because of what it stands for. In the world of luxury timekeeping, it continues to symbolize the enduring dialogue between tradition and evolution. What are your thoughts on the Rolex topic we shared in this video? We would love to hear your perspective. Feel free to share your thoughts in the comments and give the video a thumbs up if you found it insightful. Do not forget to follow Luxury World for more curated content on fine timepieces and market insights. Thank you for watching, and we look forward to welcoming you again in our next video.